Looking back at last week's market performance, it truly met expectations. The Nasdaq led with a new all-time high, then the S&P 500 also hit a new record high. This has given the market a satisfying answer. So what is the market likely to focus on next? The concern is whether the market will continue to rally or if a pullback is imminent. Let's provide a brief analysis. US stocks have surpassed the historical highs. However, we've noticed the US dollar index has reached a 3-year low. Why the stark contrast between the stock market and the forex market? What does this indicate? It reflects the lack of confidence in the dollar. The forex market's funds have not yet returned to the dollar. As seen in Q2, funds flowed into the euro and yen, and recently into the euro and British pound. Throughout June, the dollar remained at the bottom globally. Yet, US stocks remain very optimistic. In June, the Nasdaq ranked third globally. What does this divergence between the stock and forex markets mean? It shows that forex traders are more focused on long-term macro trends, such as the US fiscal deficit and the uncertainty around tariff policies, whereas stock market funds, including many retail investors, are more affected by short-term sentiment. For example, easing geopolitical tensions and expectations of a Fed rate cut, pushed by the shallow Fed chairman's stance that rapidly raised the expectations for rate cuts. So, will US stock continue to rally, or is a pullback coming? It will depend on key data in July. For example, the non-farm payroll data on July 3rd and other significant reports to follow, such as inflation data and manufacturing reports. This non-farm payroll data is crucial as it directly affects the possibility of a rate cut in July. Is it still on the table? Currently, the chance of a July rate cut is 18%, while the probability of a rate cut in September is 75%. The second key data point is the upcoming Q2 earnings season in the next few weeks. This is also a period of high market focus and great significance. Only if the non-farm payroll data supports rate cuts and the earnings season exceeds market expectations can US stock continue to rally upwards with a larger upward momentum. This upward trend, especially with AI, which is driving productivity expectations, is the lifeline of the U.S. economic narrative. Relying on manufacturing's return to drive growth is simply unrealistic. The third major event is the expectation of the 90-day tariff delay on July 9th. On Sunday, President Trump stated in a media interview that he would indefinitely extend the tariff deadline and that in the coming days, letters would be sent to hundreds of countries, including Japan, informing them of the new tariff rates on U.S. exports rather than continuing trade negotiations. Trump's statement suggests that the U.S. government is preparing to abandon the negotiation approach for resolving trade disputes and shift towards a unilateral tariff strategy. This unilateral tariff strategy could bring huge uncertainty to the future trade wars. So looking ahead, especially for the S&P 500 and the Nasdaq indices, the question is whether they can continue to set new highs and maintain their strong momentum. This could bring huge uncertainty to the markets. So especially for the S&P 500 and the Nasdaq indices, the key question is whether they can continue to set new highs and maintain their strong momentum. There are also other significant events that could influence the market. However, let's take a look at today's market situation. First, let's check the leading indicator, the S&P 500 index and the performance of its futures. Currently, the futures market shows that from the intraday chart, it continues the previous strong trend. After breaking a new high last week, tonight's performance is showing strength after the market opened. It continues this strong upward momentum. After the market opened, it moved higher, right? Continued to rise. This indicates that the current optimistic sentiment is still continuing. So today, with the S&P 500 opening on Monday, we can be optimistic here and expect the strong trend from last week to continue, especially with the market currently focusing on the expectations driven by AI for increased productivity. This expectation is a critical point for U.S. stock market, which is very important right now. If the expectation continues to rise, the economic support for the US stock will become even more effective. This will be reflected in the market with the short-term sentiment supporting the rise, so the market has started to show clear gains, continuing the previous strong momentum. Thus, on Monday, the market is likely to see the S&P 500, Nasdaq, or Dow Jones continue last week's optimism and keep pushing higher. The probability is very high that the S&P 500, Nasdaq, or Dow Jones indices will continue last week's optimistic sentiment and keep rising. The probability is very high. At this point, the focus remains on technology stocks in the S&P 500, especially the Tech 7, which continue to be a key area of market attention. Among the Tech 7, you will notice that last Friday, when they broke new historical highs, their movements were very clearly correlated. For example, Amazon. Amazon's performance was closely aligned with the overall S&P 500 trend. It followed it very closely because Amazon had significant volume on Friday. Now let's take another look at the S&P 500 index and its movement. What do we see? On that day, on Friday, when it broke a new high, it was clearly a volume-driven breakout. So this breakout is valid. Then the MACD indicator formed a golden cross here. So the future movement might correct the previous technical indicators that were particularly sluggish and give them an effective adjustment, opening up the potential for further upward movement. The probability of this is extremely high. This is highly likely. From here, we can see that the S&P 500 is advancing with increasing volume, right? And this has clearly driven technology stocks up as well. Their rise. But when we compare their movements with the S&P 500 index, you'll notice that Amazon's movement closely mirrors that of the S&P 500. Both have advanced with increasing volume. But if you look at others, such as Nvidia, there was no significant volume increase. Neither did Tesla nor Apple. So in this situation, relatively speaking, Amazon's movement aligns so well with the S&P 500. This suggests that on Friday, during the rally, a significant portion of funds were optimistic about Amazon, which led to its clear effective volume increase and the subsequent upward move. This trend can be described as very healthy and very steady. It broke through an important platform. After a period of consolidation, this platform was clearly broken on Friday. It was a clear breakout, right? This was clearly a triangular consolidation pattern, a triangular consolidation. When it reaches the end of the triangle, it broke upwards, breaking through the resistance zone here, opening up space for further upward movement. Next, it's close to reaching its previous high, so its future movement is likely to continue, moving upwards and touching the previous high. It may even break through the previous high and set a new all-time high. The S&P 500 has already broken its historical high. Next, many people may focus on the performance of the Tech 7, which ones will continue to set new highs. Aside from Microsoft and Nvidia, next could be Meta. Then it might be Amazon, because Meta is the closest to its previous high among the tech giants right now. Amazon has also performed well. Relative to other tech stocks, Amazon has been stronger in China. Of course, this doesn't mean that on Friday its rise of 2.85% was the highest. Compared to Google, it was slightly lower. But it's not because it rose 2.85% that it is the strongest in the tech sector that day. What matters is its current candlestick pattern and the volume support, which closely aligns with the overall trend of the S&P 500. So its performance here is strong, with significant volume supporting the move. The alignment is very high. This is why it's performing so strongly here, with noticeable volume increase. Look at the others. As we just discussed, whether it's Meta or Nvidia or Tesla or Apple, none of them have had a significant volume increase. Of course, Google is different. Google and Amazon both saw an increase in volume. However, compared to Google, it did not break through the previous high point. This range, so its movement is relatively weaker than Amazon's. So Amazon's future movement will definitely attract a lot of market attention because its upward space has opened up. The market will also expect that, like the S&P 500, it will be able to set a new all-time high. Next is Meta. Meta has already gotten very close to its previous high, so it's no surprise Meta will definitely break its own all-time high. There's no doubt about it. It will definitely set a new high. After the market opens on Monday, it is very likely to break through effectively. Another point worth noting is what on Friday the market was very active. One stock in particular showed a noticeable anomaly. It was Nike. Although not a tech stock, it is still worth paying attention to. Why? Because Nike had a big move on that day. Why? Because Nike stock rose by over 15%. It marked the largest single day gain in 4 years. This definitely deserves our attention. A 4 year high in a single day gain indicates that it gained significant market attention in a short period of time, and it clearly saw a volume spike. On Friday, a large volume was traded, which was much higher than usual. It was a massive volume spike, and it happened at a low level. This high volume was something we haven't seen for quite a long time, not in over a year. Such a large volume hasn't appeared in a long time. It was several times higher than the usual volume. It felt like a multiple of the usual volume. This strong signal shows that in the short term, there is significant bullish attention on it. If it can pull back and confirm support, then it will definitely be a positive signal for going long around the $65 level. If it pulls back to this position, it will definitely be a very strong buy signal. Why did Nike show such a remarkable performance? It's important to know that its fundamentals are quite weak because Nike's revenue for the 2025 fiscal year was $46.3 billion, but its Q4 sales plunged by 12%, a dramatic 12% drop, and net profit plunged by 86%. Despite such dismal data, its stock surged by 15%. What's the reason behind this? It's because Wall Street is optimistic about the new CEO and its transformation strategy with a positive outlook for its future. This has led to strong market attention, causing a surge in funds in a short period of time. So in the short term, this has generated strong bullish sentiment, which caused the stock to surge. The funds that led this surge do not expect this performance to be short-lived. There's good chance it will have some sustainability, but in the short term, a pullback would be ideal. Why might it pull back? Because there's a significant volume zone, an important area of volume accumulation. This is a resistance zone. When the stock price reaches this level, it might have a pullback demand. This pullback demand may actually give the market a more reasonable opportunity. So if it pulls back to this level, it will provide a good entry point for a long position. So look, if it pulls back to this level, it will be a very good buying point, so we can keep an eye on it in the future. It has high confirmation, so we can focus on it. It will be a very solid opportunity, so its future movement, if it pulls back, it will be quite healthy. It will be a good buying opportunity. This is a high certainty buy signal, so we can focus on this stock as a key opportunity. This stock is one to watch closely and wait for the right opportunity. This is a brief analysis of the recent market. If you have any other opinions or any questions, feel free to leave a comment below. We'd love to hear from you.